Hi, and you're watching The Week Ahead with London Capital Group. Now, it's a very busy week ahead, both on the economic side and on the corporate side, with US and UK earnings season well underway. So jumping right into it, joining me now is London Capital Group Head Analyst, Brenda Kelly. Brenda, I'm going to go through on a day-by-day basis because we've got quite a busy week. First, let's take a look at Monday. We've got manufacturing data coming out of Japan, China, the UK and the US. What kind of movement are you expecting from some of the crosses here? Let's just say dollar crosses, for example.
Well, ultimately, what we have seen just even on the Friday has been lower wage growth in the US, so that has taken a bit of a chunk out of the dollar strength. And ultimately, as well, you look at core inflation in the eurozone. We have seen that a little bit higher than what was expected. In some respects, you could say that the dollar has seen a price, certainly a rate hike priced into it already. So we may see a little bit of softness in the euro dollar and cable pairs, particularly on the dollar end of things. So those will be the ones I'll be watching at the moment. But certainly from an emerging markets point of view, I think some of the PMIs coming out of China and of course Korea, their exports there will give us some very leading indicators of growth there. And I think those will have an impact on some of the broader indices as well, particularly that of China on the FTSE and of course the mining sector as well.
Okay. Well, what about Tuesday? We've got Australia retail sales, we've got trade balance, and of course the RBA rate decision as well. Now, last week your trade of the week was actually Euro Aussie dollar. Are you expecting further downside from the Aussie dollar next week?
Well, I don't expect to see any RBA rate hike or change this time round. Obviously, their first bounce in the second quarter was in line with their expectations, but there's still room for easing in the coming months, and as well as that you obviously have easing taking place from the Eurozone as well, but we may see some more specific anchorages in inflation expectations within the Eurozone. The employment report has been fairly resilient of late. I'm expecting to obviously see that come back a little bit. Again, the Chinese drag on the economy there is more than likely going to push unemployment maybe towards 6.5% next year. So I would still maintain that the Aussie can go that bit lower, but maybe not against the euro in this particular instance. It might be worth looking at the pound against the Aussie or the dollar against the Aussie. The pound against the Aussie would be my favourite for the time being, particularly in light of the fact that we have a lot of data relating to sterling coming up next week as well.
Okay, well, speaking, we'll touch on sterling movement next week on Thursday coming up. I mean, we've got services PMI data out the UK and China on Wednesday. We've also got a flurry of US data as well, all ahead of the NFPs on Friday. We've got trade balance, ISM, non-manufacturing PMI, and also crude oil inventories. Now, what do you see as the kind of scenarios, drivers for the US dollar Wednesday, and what about levels to watch out for in terms of oil prices?
Well, I think oil is ultimately looking a lot softer than it did, and it has retraced a lot of the gains we would have seen in the first quarter of this year. So we're still down 50% over the last 13 months or so, particularly on the Brent active contract. So I think if you look at where we are currently, around the $53 per barrel mark, obviously the 50 mark represents something of a line in the sand for Brent. And also, if you look at the technicals of the picture, the retracement went up as far as around the 70 mark. So you've got a £20 or $20 range on the oil price that if we maintain below that 53 level, we could actually go lower by $20, a measured move, as it were, but according to technical analysis. But again, it would be very much related to dollar strength and indeed expectations on a Fed hike. But they are expecting to see minus 4.2 million barrels on the crude oil inventories next Wednesday. So anything worse than that could very well add to the downside in oil as well, and we could actually target that $50 mark.
Okay, so a good level to watch out for there. Now, focusing on Thursday, as we mentioned, very much focused on sterling. We've got UK manufacturing and industrial production. We've got BOE inflation report, BOE rate decision, MPC minutes, and of course, BOE Governor Carney speaking as well. I mean, what kind of levels are you going to be watching out for then in sterling, in lead up and on the back of all of this?
If you look at the daily cable chart at the moment, it has got a rising wedge pattern, which is normally something of a bearish, given that we have come all the way down from 170 or thereabouts down towards the 152, 150 level. So we're kind of halfway in the middle at the moment. My major support level on the daily is 154.70. And as long as we remain above that, I do feel that we can target the highs that we saw last month, around 158.70. That is a big level there, and if we manage to push through those, a daily close above that particular level would be exceptionally bullish for cable and would see us targeting the 160 in fairly big jig time. The Bank of England inflation report, not expecting to see huge, massive impact there, but growth, particularly in terms of wage growth, is well above that of the US, and we have seen GDP 0.7% Q on Q as well. So what's going to be mostly watched, I think, is the voting structure of the MPC, and we're expecting to see at least 2 members vote for a rate hike, Wheel and McCafferty more than likely, and possibly even Carney himself. So it could be a 6-3 split, which I think could really underpin cable, and even with euro sterling, we might see that 70 pence mark actually knocked out for good, I would hope, because I've been waiting for that to be knocked out for good for a while. But cable, my target, if we continue the similar vein, will be 158.70, and a break through that, we got 159.90.
Okay, interesting. Coming up on Friday, the all-important non-farm payrolls data. Now that's going to follow on from the ADP employment change slightly earlier on in the week. Now last month's NFP report did actually miss expectations, coming in at 223,000. What are expectations looking like at the moment for July's report? And also, given Yellen's comments, at this week's FOMC meeting, do you think the next 2 NFP releases are going to be kind of the seal the deal for the Fed in terms of the rate hike in September, or whether it's later on in the year?
I think many believe that is the case, and ultimately what she said is that she would need to see some further improvement in labour markets before hiking any rates. So there are several camps out there, the September camp and the December camp. I'd be more likely to be in the December camp, mainly owing to the wage growth lack today that we saw. But certainly everyone will be looking for a plus 220k number on next Friday, and anything lower than that might actually move people's opinions as to when and if we can expect to see a rate hike. But if you don't get good labour data and you don't have inflation to go with it, then you don't really see a reason for normalisation of rates, even if it is by a symbolic amount.
Okay. I mean, finishing up earnings season in the UK and US, as I mentioned. Now, looking at the calendar for next week, we've got a lot coming out the banking and financial sector. We've got HSBC with half-year results and Standard Chartered. We've also got some earnings from some of the big resources companies as well, including Rio Tinto. What kind of indices movement are you expecting to see next week, also in terms of perhaps some sector performance and weightings as well in the index?
In terms of the FTSE, certainly there is quite a significant weighting towards the basic resource sector, and they haven't been doing too well of late. Obviously China will have an impact there, and of course the actual prices of the commodities themselves are falling quite dramatically too. But what you might probably see in these earnings, more so from the actual statement afterwards, the conference call, will be what sort of production levels they're going to sustain themselves at, and whether they're going to cut back on those particular production. So obviously it's going to be important for profit margins that we see commodity prices start to rise up higher, but again it will be very much related to the dollar and any sort of recovery in China. For the most part, I think the basic resource sector hasn't had the best of years, and some of the reports we've seen already this month have been fairly downbeat, but there does seem to be a certain degree of M&A and potential takeover action within that particular sector, so there may be pockets of opportunity amongst some of the smaller cap, I think, mining stocks.
Okay, brilliant. Brenda Kelly there with London Capital Group. Thank you very much. Well, that's all for today's Week Ahead. Join us next week, but for now, goodbye.